Welcome to PhillipCapital's weekly market watch. There has been much volatility in the currency market following news of the sovereign credit crisis since early this year. With uncertainty in the outlook of the global economic recovery, how will commodities perform this year? Today, we have Mr. Wong Eng Soon, research analyst from Phillip Futures, to share his views with us. Eng Soon, what do you view as the greatest risk to the global economic recovery?
I think currently, sovereign downgrades present the greatest risk to global economic recovery as may lead to higher debt servicing costs that impedes recovery. Greece had a threat of a credit rating cut lower by Standard & Poor's after European finance ministers adopted a bailout framework for the debt-stricken nation. However, budget cuts lined up this year may lead to an economic contraction, making it more difficult for the government to raise revenue and carry out the deficit reductions pledged for next year.
Do you think risks to the global economic recovery may lead to smaller commodity inflows this year, after reaching an all-time high of 70 billion in 2009?
Yes, because commodity fundamentals have weakened. China's 4 trillion yuan stimulus package approved in November 2008 and US 787 billion fiscal stimulus approved in February 2009 generated a huge demand for commodities as a significant proportion went to infrastructural spending. This year, central banks from China, Australia, Federal Reserve and the European Central Bank are all pondering on when and how fast to raise benchmark interest rates. This will raise borrowing costs and weaken commodities demand.
Which commodity market or sector do you expect to perform best in 2010 and why?
Platinum group metals consisting of platinum and palladium is likely to perform best in 2010 because the recovering auto sector is likely to generate higher demand for its use as catalytic converters. The launch of new ETFs on platinum and palladium has also increased its investment demand tremendously. Coupled with tight supply in South Africa, which produces more than 75% of the world's platinum, state-owned power utility Eskom Holdings struggles to fund a 62 billion expansion needed to meet rising demand. To date, platinum has appreciated more than 10% this year, while gold is up slightly less than 3%.
Thank you, Eng Soon, for your time. That's all for today. Stay tuned next week for more market updates.